One concern that I have with CBDCs is that if it was to, in the United States, if a CBDC was to be launched and there's sweeping surveillance followed by controls, then that undermines the protections that people typically associate with the US and what we're doing. And unfortunately, when you have that much data available, the natural move for governments throughout history has been to try to act on that data, to try to act to either control people in terms of limiting opposition and dissent, or to try to nudge people in terms of getting more quote unquote socially desirable outcome. Unfortunately, a lot of rights get thrown to the wayside anytime you have terrorists or the just general black box that is national security in the mix. And the people throwing those rights to the side can be both Republicans and Democrats.
Nick, welcome back. It's great to see you again.
Thank you for having me back.
Congratulations on your excellent book, published since the last time we spoke in March, called Digital Currency and Digital Control. I highly recommend the book for anybody who hasn't read it or who is interested in CBDCs, because you laid out a comprehensive description of what CBDCs, central bank digital currencies, are and what they can do and the benefits that they bring to society and what they would mean to society if they were to play a role in any country or territory like the EU, for instance, as well as policy prescriptions. When we spoke in March, CBDCs were not very well known and they definitely weren't very understood, but they've been in the news a lot since then, including a ban on them in a bill passed by the House called CBDC Anti-Surveillance State Act. And it's now sitting in the Senate. And I want to spend a little bit of time on that because it certainly made the news and it probably prompted a lot of interest in the subject from people who didn't know about it. And we also have two presidential candidates who are talking about banning it permanently. But before we go into those developments, let's spend some time on what you laid out in the book. It was laid out in a really well-organized structure. And let's talk about the innovations that they bring to central bankers and the innovations they bring to the public payments marketplace, made comprised of the private companies. Because we in the US use digital payments as a matter of course, and they seem to work just fine. And so I'm curious what the proponents of CBDCs think that they bring to the table. And so, let's just start with, what is a CBDC?
Well, fundamentally, it just boils down to being a digital national currency provided by the government. It's a direct liability of the central bank. And like a paper bill, so a $1 bill or a $5 bill, it's a direct liability. But unlike that, it actually establishes a direct connection between you and the government. So we're talking about the government is ultimately the one to manage your money, to oversee your money, to effectuate transactions. And like you mentioned, we have tons of digital options right now. You can spend money through debit cards, credit cards, PayPal, Venmo, Strike, cryptocurrency, and the like. And this is really only innovating in the sense of it's opening up the door so that the government can be more involved than ever before. It might have been a different conversation if this was 30 years ago, but right now, with all the digital options we have, the main change here is that the government is involved with everything that you do.
And so what are the benefits that proponents think they're creating with the idea of a CBDC?
Well, to be as kind as I can, these are all great promises. Proponents say that it's going to improve financial inclusion, it's going to speed up payment settlement, it'll improve the application of monetary policy and even strengthen a currency status. All good things. Taken at face value, those are all good things. The problem is that none of those things are likely to happen with a CBDC. And as I tease out very early in the book, these are all things that once you start to kind of pick away at the surface, you set aside that these are good things, but then ask, how does this happen? It really doesn't work in practice. A great example is monetary policy. How do we improve monetary policy? Well, one of the ways that proponents ultimately recommend a CBDC is that it'll improve monetary policy by increasing surveillance. You'll be able to see what everyone is doing and collect more data to make more informed decisions. In a model, in a highly stylized theoretical model, yes, that works. But when we're talking about the real world with real people like you and I who have real lives and rights that go along with them, you can't have an unfettered surveillance system in the hopes of just improving something down the line. There are very real costs that come along with that.
The title of the chapter that you're referring to is terrific. They serve no good purpose. CBDCs serve no good purpose. The financial inclusion is particularly interesting. Most people are not interested in a bank, or many of the people that are not banked right now
Well,
would definitely not bank with a
well, yeah,
CBDC.
and that's another perfect example is that I think it's about 70% of people who are unbanked, so they don't have a bank account. 70% of people who are unbanked do not want one at all.
This show is being brought to you by our sponsor, Truflation. Professional investors and economists, and probably any casual observers, know that government inflation statistics are only an approximation of what real inflation is. Not only that, but the government has a conflict of interest because high inflation can be so damaging to the economy, the deficit, and our $34 trillion in debt. Truflation collects over 13 million pricing data points. Most are updated daily to reveal inflation with precision for asset managers, governments, companies, and the general public. Check them out at truflation.com.
And policymakers, while it's perhaps noble in that they want to help people who are without something, they need to remember that these are real people. These are not digits on a spreadsheet. If they don't want to have these accounts, then we shouldn't be forcing it down their throats. It's as simple as that. It's in the same way that we think about unemployment, we usually uh, qualify it by saying that it's studying or it's reporting the amount of people who are without a job and are looking for a job. We should be thinking about the unbanked the same way, that these are people who are without accounts but want them. And that number is much lower than what people typically focus on.
And not to mention that the unbanked portion of the population has been small for a long time and continues to be very small. It has been eroding slowly from 8.2%, as you point out, to in 2011 down to 4.5% in 2021. I assume that's largely because the private sector is doing an awfully good job of providing products that these unbanked people now prefer to being unbanked.
Yes, we've seen this huge rise of services, both entry level accounts, mobile banking, and the like, which have largely coincided with this decrease. And when you think about how long it's going to take to create a national infrastructure for something like a central bank digital currency, we're talking 5, 10 years maybe to get that from start to finish and into the public's hands. At the current rate, by that time, the only people that are going to be unbanked are probably going to be people who only want to be unbanked. The rate that it's continuing to decline and the amount of people who are not interested at all. I dare say that's all that's going to be left at that point. And then it's like, well, what are we doing? This whole pillar that was supposed to be the reason to have this is now out the window.
Well, you also mentioned speed of payments as one of these attributes. And I do find that a bit ironic because I think it's the ACH system that's been slowing down the entire movement of money, and that banks using their current system seem to lock up funds for a long time. I had to move a sizable amount of money last year, and it was 12 days before they allowed me access to invest that money. Just a ridiculous holdup that I have
Mm.
always thought was caused by inertia of big bureaucratic operations. And I think that probably is what a CBDC would have to be created by. But am I going in the right direction?
Sadly, there's so many factors here where if we have a CBDC hit the ground to fix faster payments, we have to stop and ask, well, why do we have this slow payments problem, like you mentioned? And for the better part of a decade now, the Federal Reserve has been trying to fix it, and we really haven't gotten very far. In the private sector, we have a ton of options that are now on the table, ranging from the real-time payments network from the clearinghouse to stablecoins and everything in between. But the Federal Reserve really only last year introduced its own solution to it, the FedNow network, which it's largely kept under wraps in terms of how much use that's actually getting. So we really don't know whether or not that's the fix that it really promised it to be. And I imagine we would see a similar event happened where as private sector developments hit the ground, if a CBDC was introduced, we really wouldn't see whether or not it's working, at least for some time. And I think we'll face many of the same issues. And it's a little ironic, though, as well, to be doing it at this time when we have things on the table because even the Federal Reserve itself has admit, members of the board have admit that with everything going on, it doesn't really make sense to introduce a CBDC between the real-time payments network, the with FedNow being launched, with other improvements being made as well to the infrastructure, like expanding hours. It doesn't make so much sense to introduce it, at least on these grounds. And again, like with financial inclusion, you just see this reason quickly go out the window as you pick away at it.
Um, Let's talk about the various types of CBDCs. I think it's probably best to think of in three categories: the retail CBDC, an intermediated CBDC, and then a wholesale CBDC. And
Yes.
if we can, let's just touch on the wholesale CBDC quickly. As far as I understand, this would be simply a digital currency that is used between the central bank and the member banks, that already move money immediately and already doesn't, I haven't heard of any big problems that have come up with that. That's kind of an easier technology to handle. And the idea of so is there a purpose? Would there be benefits for the central bank to develop a CBDC that was simply only used by the banking system?
Well, the tough thing with that is that when you think about a digital currency used by the banks for interbank settlement, and you look at what we currently have, where banks are currently conducting interbank settlement with digital currency, it kind of makes you wonder what the difference is, what the improvement is. And this is something that, to his credit, Federal Reserve Chair Jerome Powell has said before Congress that it doesn't make a whole lot of sense to introduce this because it's kind of what we already have. It's kind of the way that the system already works. I think there may be grounds where maybe there's an infrastructure change or a lane change for how this digital currency is moving place to place, what this settlement mechanism is. but it's unclear exactly how that's going to take shape. And another way to really think about how unclear that is that there's also countries abroad who are instead looking at wholesale central bank digital currency as kind of a transition step to retail. So it's really kind of the test round to use it there. So the the devil is really in the details. It depends what exactly it's going to be used for and how.
Yeah, and I would think in a system that small, using normal technology and not distributed ledger, because I think that's at the base root, that's the most fundamental difference between the two. Is a distributed ledger that is probably centrally controlled anyway, but that ledger is very difficult to ever change. And there's probably some role for a mistake happening between two banks where the Federal Reserve can actually come in and say, no, we're going to straighten that out, which you really would lose the power to do in an officially distributed ledger.
Hmm.
Is that
That's right. And another thing to point out is what you kind of hinted at. As far as I can see, most banks, it's a little strange. They'll use the phrasing that they're using distributed ledger technology. Granted, some don't at all, but for those that do, they use distributed ledger technology, but it's centrally controlled. And you
and
really have
therefore
to
it's
want,
not even really a wholesale CBDC. And at
and
the end of the day, the central bank doesn't want to give up control over that ledger, and they're not going to.
yeah, and
So with that in
that's
mind, why don't we move to an intermediated retail CBDC?
well, that kind of blends the two sides of retail and wholesale. And this is where, yes, it'll be maintained by the banks in the sense that they're a custodian. They watch over it. They conduct anti-money laundering and anti-terrorist controls. They make sure that everything is happening above board. But it's still a CBDC for us to use on the ground to buy coffee, pay for gas, pay rent or mortgage with. And so the idea is that you kind of keep banks in the process, keep them involved somewhat, but it's still this radical departure in that the government has the ultimate say over everything that's happening on the table.
And we may want to go into some more detail later in this, but the European ECB, the European Central Bank, the ECB, would like to seems to be very enthusiastic about moving forward with this CBDC
Hmm.
by all of their official news releases, press releases, etc. And that is the route that they're going to take. They want to allow the banks to use it. And so there is a very large portion of the developed world that is moving in that direction. And so that's why I wanted to touch base on what that was. And then let's just talk about a retail CBDC and the multiple problems with that.
Well, retail is really the version that most people think of when they just say CBDC. 9 times out of 10, if you hear someone say CBDC, they're talking about a retail CBDC, and that's for us to use on the ground with a direct relationship with the central bank so that you're opening an account with the central bank. They're approving you, they're conducting KYC and AML, they're doing customer support, they're maintaining everything that happens and have a full insight into what's going on in the ground. So you just cut out that layer of the private sector that you have with an intermediated version.
And the money that we would be using if we went to our bank and withdrew electronic cash, I guess we'll call it, in the form of a CBDC that would be resident on our phone or in our account to readily be used in payments. Europe wants to go through their payments rail system so that they don't undermine it, although they say we're certainly willing to let them have a fair profit. Interesting to see where that would go. But how do you think that is likely to play out in the countries that are launching that have launched retail or are going to launch retail CBDCs, and how might that look in this country?
That's a hard question to answer, only because when you get down into the ground level, it really varies a lot. There's a huge range of technical differences that we're seeing in everywhere from Zimbabwe to America in terms of how they want to approach it and then how they actually are approaching it for the subset that have moved forward to pilots and launches. I think maybe in the last year to 18 months, involving banks and the traditional financial system in some form or fashion has kind of become the more common route because of natural lobbying efforts from those groups who are worried about losing money. But also, we've seen uh, those maintaining the payment rails, such as credit card payment rails um, or other similar efforts, come in and say, well, we want to be what you use for this. We don't care what form or shape it takes, but as long as you use our technology. And in that same way, there's also cryptocurrency companies that have kind of fallen in route because they want to develop the blockchain side of it or other cryptographic protocols that go on around it. And so I think what ends up hitting the ground will vary jurisdiction by jurisdiction, depending on what existing industry is in the country at the time and how much money is on the table in terms of government contracts. But we have seen more and more that the norm is shifting towards some type of involvement.
And privacy. What is it about a CBDC that is threatening privacy?
Well, I mean, the easiest way to think about it is for listeners to look at their bank statement, to look at what it says about them. Look at all the memo lines. Shows where you like to eat, maybe where you pay tolls in your commute or your vacations, where you're purchasing tickets for flights. It shows who pays you, where maybe you go to church or where you spend your leisure time. And all of those elements really paint a vivid picture of who we are and what we're doing. And unfortunately, when you have that much data available, the natural move for governments throughout history has been to try to act on that data, to try to act to either control people in terms of limiting opposition and dissent, or to try to nudge people in terms of getting more quote unquote socially desirable outcomes. And we've seen throughout history that this quickly goes awry. And it's not something that we should want. And luckily, most people do not want this and have spoken out, and central bankers have started to address it. But I don't see any realistic way that they can address it so long as the underlying anti money laundering and know your customer requirements stay on the books as they're written, where the law says that they have to collect this information. If a CBDC opens up the door to collect vastly more information, then they're still going to act on it. A perfect example of this was out of the European Central Bank. There was a blog that was called Making the Digital Euro Truly Private. And I was very happy to see it opens up saying the ECB does not want to collect your information. The ECB is not interested at all. We want to keep your information private. And if it ended right there, that would have been great. I would want to see them back it up, but it would have been great to see that. But the very next paragraph said, ultimately, however, it's not the ECB's decision. It's not our decision how private the digital euro is going to be. It's ultimately up to the legislators what that's going to be. And in this small example, we can perfectly see that, sure, central banks might say the right things, and many are pursuing privacy in a legitimate effort, but what we actually see on the ground based on the current laws is going to be something that is highly intrusive.
And while they wrote about legislature, it's also the regulators that all over the world are often enabled subtly and not directly by the legislators, but very often are acting outside of the legislative priorities and rules. And so that does sound like a problem if the government is going to be able to see all of that. And then these are controllable. CBDC can be controlled. One thing I wanted to point out, your book does what books can do that podcasts can't do very well, and that is list many, many, many incidents of when governments have reached beyond the intention of laws and edicts, and so that's important. There are many anecdotes that you cite, and of course, most people readily acknowledge that you can't trust the government 100%.
Unfortunately, that really is what history shows us, and that's why I wanted to have that list there, because you're absolutely right. It's a rare format that lends itself to it, and I realized that just seeing it, just seeing how it takes up a full page of all these moments in history where it's expanding, expanding, and expanding, the surveillance capabilities of the government, that is, it really shows you that this is going in one direction, and a CBDC seems to be the capstone in that history.
Well, it's in many ways, in my personal opinion, the ultimate weapon if the government can see everything you're spending and actually tweak it, turn things on and turn things off, which is what we've read about the Chinese CBDC. And so so anything that they were to set in motion today would be designed into software that could be altered in the future, either by benevolent action or malevolent action of officials. And that doesn't even talk about the risk of hacking.
Yeah. And that's what is so fragile about this whole proposal, is that, and I love the way that you've set this up. Internally, you can have the government itself change it drastically if it's only a matter of software. I mean, think of a physical note. There are a lot of security features on US currency and currencies around the world. You have inserted strips, you have different dyes, you have overlays, you have watermarks and the like. But what can be done is ultimately restricted to what can be put on that physical note, what can fit inside that physical note. And maybe technology will open that much wider in the future, but it is limited. In terms of software, though, it's really just left to the government to decide what it'll ultimately put in that. It might be perfect on day one for preserving our privacy and protecting our freedoms, but day one is not the end of the story by any means. It only takes one catastrophe for values to drastically shift, as we saw with the Patriot Act. But the problems aren't just internal, it's also external, because if somebody wants to hack it, it could be a for profit hack because so much money is available here. You're talking about every person's wealth being effectively stored in the same place. But also, given that it's the US government operating this, you might even have cases where it's one of the US's enemies that decides to come in here and attack. And that's especially frightening because you no longer have the costs and benefits of a for profit hack to be considered. Now you have somebody who's thinking of this geopolitically, or thinking of this in terms of an act of war. And they might be willing to sacrifice a great deal more than your average hacker who is going after, say, Bank of America or Wells Fargo. And so constantly you have that internal and that external element pushing at this. And it really gets back to how we started talking about this. if there's no benefits for you and I, why are we risking that? Why do we want to put that on the table? And I really don't know unless I was to be a government official who sees the opportunity for control that this offers, then the benefits might be there. But again, those are benefits only for the government, not for the average American.
That seems to come across well in your book as well. I There was a hearing with the House Financial Services Committee 11 months ago, and in it, Representative Sean Casten um, made a very interesting point. He's a Democrat from Illinois. Um, he, and this is one of the shortcomings that you talk about in the book. He said CBDC is a direct liability of the central bank, and if a bank has it, it's not a liability of the bank, and it therefore cannot be leveraged. So it would undermine the fractional reserve banking system. And he said, so why are we talking here? If China wants to launch one of these and it's going to unravel their fractional reserve banking system, have at it, because we don't want to do that here.
Yeah.
Talk about that just for a little bit.
Well, the short version of this, because this can get very nerdy very quickly, is that banks and other financial institutions typically use deposits to fund loans. So out of the pool of deposits, they're lending money out, and then that goes to small businesses, people trying to buy a car or buy a home or the like. And one of the crucial components of a CBDC being a direct liability of the government means it can't be a liability of a commercial bank like a deposit would be. And so they can no longer use it in that same way to fund loans. They can no longer use it in terms of if they are working as a custodian, that they can fund loans off of it because it has to sit wholly in the account untouched. It's almost more akin to a safety deposit box that you put cash in. That can't be used to fund loans either. And what ends up happening then? Well, the supply of loanable funds ends up restricting, but with demand unchanged, that means that the cost of those loans needs to increase. Then all of a sudden, banks are going to need to turn to costlier avenues to hopefully fund those loans. So that might help hash out a little bit, but you're still going to face higher costs or you're still going to see small businesses and individuals and the like face higher costs there. And that's exactly what the representative was talking about was this ultimately undermines the financial system and hurts economic performance. So why would we want to do that? And there's really not a good reason. And if other countries want to do that, have at it. Let them do their thing. I very much see where he's coming from in that respect. And it's one of those places where again, it's what are the benefits to offset this cost? And I just don't see them.
Yep. And there's a related risk, and that is individuals that have accounts at banks that support the lending and the operations of the bank through leverage and lending may get spooked. And who wants a deposit at a bank when you can just move everything into a CBDC and have a direct liability to the central bank and not have to worry about an intermediary, coughing up your money when you need it
Exactly.
in times of trouble. And in fact, the ECB has gone to great lengths to explain this, and they have in the proposals or the discussions of their research so far, because nothing has actually been settled yet. They still have another year. It's pretty interesting. It's the end of 2025 that they're going to decide to move forward or not. But they talk about limiting the number of euros that anybody can actually have on their CBDC. And why? To protect the banking system. And when you think as a depositor that I may be getting 2% or 3% or 4% interest at a bank, as compensation for the risk that the bank may run into trouble and I might lose 100% of my money. It's a very quick decision in times of stress that you want to move all your money to a CBDC. And so it is unusual that everybody wants to introduce this risk into that. Proponents would be pushing for this, that and with along with all these risks to the banking system. And it's going to be very interesting to see how things progress. I'd like to let's talk a little bit more about current events. We spoke a few months ago, and actually a lot of things have happened, including recently several countries in the EU who, for some, I don't know how they were tagged as the spokespeople, but there was a news story that several countries have expressed opposition to the CBDC in Europe. Do you have a feel for how things are proceeding in Europe? I do find it's mysteriously quiet over there to get some real information. But I'm wondering how things are going, because that probably does pose the most serious proposal. If the European continent were to introduce a CBDC, that might change a lot of minds about its wisdom.
It's such a fascinating area because really when we're thinking about the Eurozone and the European Union, it should boil down to what's happening at the European Central Bank, but there's also a ton of activity at the country level as well. So, to no surprise, the European Central Bank is very much pushing forward. I think it spent or offered rather about €1 billion this year to developers to try to build out different components of the CBDC, or at least the proposed CBDC. And also, they launched a pilot program for a wholesale CBDC. But at the individual country level, we're seeing more and more government officials speak out and say this is something that they're not interested in. We're seeing people have protests, organize events against this. It's really a very it's a very shocking moment in history because so often these are issues that are boiled down in the weeds and not really seen in the public eye, and yet we actually have people on the ground who are taking notice and becoming more concerned about this. That's part of the reason, as I mentioned before, the European Central Bank had written a blog about privacy, was to try to push back against those public concerns. Now, I think when we'll really see these come to light in a major way, though, is going to be, as you mentioned, probably towards the tail end of next year when we get close to that next stage decision.
When opponents feel that the threat is becoming
Right.
more imminent. And I've noticed you are a co-designer of the CBDC Tracker. Congratulations! It's a terrific website.
Thank you.
And I noticed that there are a number of countries there that have canceled their interest in. They investigated, did research, and decided we're pulling out. Is there a trend there? Is that recent? What are, as you look across the globe at these studies, are there any trends that you're seeing in the last 6 months?
There have been a few countries that have gone that route, but I haven't noticed a huge trend in terms of it. So for example, I know this year the central bank in Colombia issued a report that said we don't see a reason to issue a CBDC. There's no sufficient reason to issue one in Colombia, either in a retail or wholesale form. In the same fashion, the Bank of Israel said that they're interested in a CBDC, but they ultimately want to wait until a major jurisdiction does one first. They were particularly eyeing what's happening either with the European Central Bank and the Federal Reserve and the Bank of England. So they're holding off in that respect. Yet on the flip side, there's other groups that are or other countries that are pushing forward pretty much full steam ahead. One unexpected source was in the Bahamas. The central bank recently revealed that it plans to start forcing commercial banks to distribute the CBDC because uptake has been so low. And the Bank for International Settlements recently announced that it's working on a wholesale project with the central banks in, I think it's England, France, Japan, Mexico, the United States, and I believe Switzerland. I might be missing one. Um, but so we're seeing this like really wide range of issues. There's some that are completely dropping it, some that are pushing forward full steam ahead, and then others who are kind of in this moderate position of still trying to figure out just what they want to do. But I think if I had to guess, we are going to see some more countries drop out in the near future just because it's so hard to rationalize what exactly this is for, especially among public scrutiny.
One of the trends that seems to be, you just used an example, but probably a trend we're going to continue to see is countries that initiate a CBDC have a hard time getting people to want to use it. And they have to start doing things like passing rules, forcing people to take it. Why don't we talk about the handful of countries that are down the path and have had struggles with this?
Well, the Bahamas is the latest in that story, but the whole Caribbean experience has been one of struggling to gain adoption. People just aren't really interested in it. And that's what we've seen elsewhere in Nigeria. People really were not interested in it at all. In China, people were interested for a little while when the government was giving out huge sums of money through the CBDC in a sort of lottery system. But now that that's subsided, people aren't really using it. Merchants aren't accepting it. And another example is in India, where the central bank set a goal for um, I think it was 1 million transactions per day that it wanted to get to, and it was racing for this. It was launching incentive programs. It was trying to spur use in any way that it could. It was like everybody there was burning the midnight oil to get to that, to reach that target. And to their credit, they did manage to hit it. In December of 2023, they got to 1 million transactions per day. Now, when you look at where they are, that's fallen all the way down to 100,000 transactions per day. So just 10% of what it was. And still a big number, but not very big in the context of a country as big as India. And what we're seeing is since transactions are no longer being incentivized by the central bank and through commercial bank projects, people just aren't really interested. There's not this organic demand. And that really fits in to what we, I think, opened with this, saying that there's tons of digital payment options out there. There's stuff that people know how to use and like to use. So we don't need another version. Sure, people will use it if they get free money out of it, but outside of that, not so much.
Let's talk about the US and what's gone on about CBDCs directly and indirectly. We'll start with direct, and that is the presidential candidates coming out against Trump and Kennedy, and the bill that was passed in the House. It was passed barely. There were only 3 Democrats. It was all the Republicans and 3 Democrats. And yet there are plenty of Democrats who seem outspoken on the House Financial Services Committee in their skepticism about why we would want to move forward with the CBDC. Why is it that that they got so many Democratic votes there? And tell me a little bit about that legislation. And it's sitting in the Senate, and there's probably a story behind the story.
Well, the the core piece of the legislation that was introduced, the CBDC Anti-Surveillance Act, introduced by Representative Tom Emmer, was meant to prevent the Federal Reserve or the Treasury from issuing a central bank digital currency, and it was meant to block it in terms of retail and intermediated forms. Now, I think there was a good handful of Democrats that agreed with that, that wanted to restrict the powers of the Federal Reserve and say this decision rests with Congress alone. It is not for the Federal Reserve. I think a good chunk really agreed with that. And we even saw other bills of a similar fashion introduced by the likes of Representative Jake Auchincloss. I think the problem, though, was when it was debated on the House floor, there were a few amendments added to it. So it went beyond that original limited scope. And what those did, in short, was went beyond blocking the launch of a central bank digital currency, but also blocked pilot studies and also kind of a gray area around designing or maybe even researching a CBDC. It's a little difficult to parse the language. For instance, in one part, it says, in a sense of Congress, the Federal Reserve should not be permitted to develop, create, or implement a CBDC. Create and implement could be taken as launch, but develop might include research. And I think that was the line, though, that many Democrats were drawing. They saw that if we can't do research, then this is a bridge too far.
Yeah, I think that it seems that the bill, the voting against this bill was not the same thing as saying you believe that there should be a CBDC.
And I can
Um,
see I can see some concerns where on Democrat side where it prohibits testing, Democrats might see that as, okay, that's prohibiting research, like that's prohibiting theoretical research, and they see that as going too far. However, I can also see on the Republican side, I can see people looking to in China, where in the HRF CBDC tracker, it's recorded as being launched, but the Chinese government says it's just a pilot. And I can see Republicans saying, well, we don't want a pilot like that that involves 10 or sorry, hundreds of thousands of people. That's clearly not a pilot, but it's working around the system, labeling it as such. And hashing that difference out can be done through some careful language. I think something as simple as adding they can't conduct a pilot that involves the general public. It can only be in a closed, simulated activity. I think that might be what strikes the balance between the two sides. However, my read on it currently is it was just a little too far for some Democrats to get on board.
I found even Representative Brad Sherman seemed to be very clearly against the ability for a centralized authority like the Fed or individuals in the US Treasury from being able to use this to target political activists or political activity of any sort. He seemed very concerned about that in the hearing on CBDCs. And so that was the clue when I saw that he voted against the CBDC. I know that his proclivity is to
Mhm.
prevent a lot of these problems that we've been talking about. And there are certainly plenty of other Democrats that are outspoken on that. And so it sits in the Senate. And what about there's a different composition of Republicans in the Senate, isn't there? So there's less likely to be a unanimity that you saw in the House.
Right. It's going to be, I think, a bit of an uphill battle in the Senate, as these days most things seem to be. But I think there's going to have to be some sort of negotiation to figure out where exactly it will go, because as it stands, I think it's going to be too hard to get it to enough enough votes to secure a vote on the floor. And how exactly that happens is probably going to depend on offices like Senator Mike Lee, Ted Cruz, Cynthia Lummis, and the like, who have all taken a big stance against CBDCs and have shown at times in the past that they're able to work across the aisle. So what we might see in the near future is something that looks very much like the House version, but has a few notable changes as they try to rally votes.
And on the Republican side, it's because there are a handful of Republicans who seem to embrace the power of the state over enabling the state to have enough power to overcome criminals and other have weapons that are effective against any type of criminal, foreign or domestic. Is that a good way of phrasing it?
Unfortunately, a lot of rights get thrown to the wayside anytime you have terrorists or the just general black box that is national security in the mix. And the people throwing those rights to the side can be both Republicans and Democrats. We've seen that in history all too often, and I'm sure there are folks who want to have CBDCs on both sides because they see it in that light.
Well, and part of the reason that we are aware of this element of Republicans and those who believe that the state should have some power is in what we saw right after we spoke in March, the passage or there was a court that struck down as unconstitutional, the Corporate Transparency Act.
Mhm.
And that act was buried in the Defense Authorization Act of 2021, and that is that went into effect in 2024, and that requires corporations to disclose owners of their company, and that has to be filed in a form with FinCEN, and that is in the process of happening. So there are already millions of companies that have filed these forms giving the government information about ownership that has heretofore never been close to
One of one,
happening. And so I do think that this is a close cousin of the situation that we have here. And that's why it is appropriate to be worried, even though there are a lot of outspoken critics of a CBDC. It's acts like these that make you concerned that there are enough people in the government that will want to get this thing through.
one of my favorite things about that, just a brief aside, is I've had so many friends who know I work in the monetary and financial space, but don't know a lot about it, asking me, who on earth is FinCEN? What is FinCEN? Because they're finding out they need to file these reports. And this is a perfect example, though, of how this could get off the ground in a kind of buried fashion, because before that, before this, there was when the CARES Act was getting off the ground, there were multiple attempts to have, as a piece of the CARES Act, a CBDC would be launched to get out the stimulus funding. And time again, there was these arguments saying we need to launch this, we need to set this up in one way or another. We need to create accounts at the Federal Reserve so we can get this money out there. And it would have just been a couple pages in a stack of 1,000-page bill. And whether it's in a National Defense Authorization Act, an Infrastructure Act, or what have you, it could very easily be put into an omnibus bill and radically change the way things operate almost overnight. And that's one of the reasons why I would like to see some sort of barrier established. So that way it's not just a matter of flipping the switch on. You also have to take off the cover and turn the key and then switch it on.
As I started to learn about CBDCs and stablecoins, I just saw such a similarity that the functionality of what the central banks are trying to do with the CBDC essentially, most of it, at least, is already available in this new development of stablecoins.
Mhm.
I'd love to talk about that just for a second, because you laid out in the introduction of your book how Bitcoin is the perfect opposite of CBDCs, and there was a checklist of items. And if you put stablecoins in another column, would we see that there are a lot of similarities in the intent of
Yeah,
CBDCs that stablecoins already solve?
yeah, absolutely. I think we've really come at this in a fascinating time where so many stars are lining up. And stablecoins are a huge part of this conversation because dollar denominated and backed stablecoins are largely achieving what proponents have said a CBDC would in bringing faster payments to the table today, not 10 years from now, but today, by expanding the reach of the dollar today, getting it out there into new avenues, and also creating new sources of innovation for people building on top of the stablecoin infrastructure. So there's a lot of similarities in terms of getting the dollar out there and getting it into more hands and having another digital option. Yet you don't have the hangups of the bureaucratic drag behind it, or even the sweeping possibility of violating people's rights at large. It's only left to who wants to use it, when they want to use it, for what purposes they use it. Unfortunately, it seems that governments around the world want to stomp that out and replace stablecoins with CBDCs. But to the extent we can have a future with stablecoins, I think it's a positive future.
Well, one of the implications of this extraordinary growth and stablecoins at the last measure is something like $150 billion worth of assets under management. And that extraordinary growth has been largely propelled, because it's not a US phenomenon, in international markets, particularly third world countries, where people would rather store their money in dollars than in their local currencies, most of which debase very rapidly through inflation. And this extraordinary growth not only is a store of value for them, but it's also a monetary exchange, because there is now it's very easy to use stablecoins in commerce. This move towards dollar usage in areas of the world that heretofore hadn't been able to access these dollars. They had to use hard currency, and the hard currency was much more readily controlled by governments. But now that these people can actually get their hands on dollars, it bolsters and reinforces the dollar as a reserve currency, which is ironic, because a lot of the CBDC concerns are around whether it's going to help or hurt the reserve currency status of the US dollar. I'm curious what you think about this. If CBDC movements were to, let's say the BIS, the Bank for International Settlements, which has been trying very hard to institute a central bank, a clearinghouse for central banks in their use of CBDCs. If a lot of other countries and territories were to develop a CBDC in conjunction with BIS, and they were all had interchangeability, what effect do you think that would have on the US dollar's reserve status?
I don't think it's going to have the huge effect that a lot of countries are bracing for, or rather, I should say, a lot of central bankers are bracing for.
Or politicians, right, who are
Exactly.
expressing worry about this.
And many of them have said that the US needs a CBDC specifically for this. And I see quite a few problems with this. So, first and foremost, the technology involving the dollar, it helps its use. It helps get it out there, but that's not the deciding factor. In fact, it's far from being the deciding factor in what makes the dollar so attractive internationally. There are countless people abroad holding physical notes right now. And I think it's really important to understand that, yes, there's room for an alternative system that people may create with interoperable CBDCs going around, but that doesn't mean that there's no role for the dollar. That doesn't mean it would completely replace the dollar, because what makes the dollar so important is the protections that we have in this country and the strength of the US economy. That's what's making people flock to it. That's what's making people want to hold it instead of other options. One concern that I have with CBDCs is that if it was to, in the United States, if a CBDC was to be launched and there's sweeping surveillance followed by controls, then that undermines the protections that people typically associate with the US. That undermines the rights that people associate with the US economy and might lead people to flee to something else, to flock to something else. You're always going to have bad actors or enemies of the state who choose an alternative system because they've been locked out through sanctions. And if the US introduces a CBDC, those people are still going to be locked out. China and the BRICS nations are still going to have their same motivations for their same national security, really, uh, motivations for creating their own system. And whether or not the US introduces a CBDC is not going to change that.
Well, it's not impossible, and it may even be likely that part of the reason that when countries launch CBDCs, their usage is needs to be stimulated and isn't readily adapted, is a concern about privacy and is a concern about all of the issues that you raise in the book. And to that extent, I would also not worry about the US dollar as a reserve status, because if major developed countries were all to issue CBDCs and interact, it may actually be the opposite, where everybody needs dollars even faster and more
Mm.
readily because they're not attached to a CBDC. And so I haven't heard that argument in Congress, but I haven't listened to a lot of discussions about it. But I imagine that that argument is probably going to find its way and may carry some weight.
Yes, yes. It's been always fascinating to see just what Congress latches onto. Sometimes the best of arguments and sometimes the worst of arguments. But I will say there's a few that have done well to push back. I think it was Representative Chip Roy actually spoke up in the surrounding the CBDC Anti-State Surveillance Act when he said that yes, the US is carving a different path here. The US is carving a different path where others are pursuing this, and we're saying, no, we're going to prohibit the central bank from doing this. But maybe that's a sign that we're actually doing the right thing. We're not just jumping on this bandwagon. And that was very refreshing to hear him say that it might not be a panacea to always go the opposite direction of others, but this is a case where if everyone else is going down the path of violating the rights of citizens, maybe it does pay to be a little different for once.
Well, Nick, this has been fantastic. Thank you so much for taking the time to talk with me about all this. It is quite a big topic. Hopefully, it's gaining some traction.
Slowly
Um,
but surely, it's getting out there. Thank you for having me on.
Absolutely. And everybody, you should definitely read this book if you're interested at all in the real argument, and the real, a thorough description of the situation with central bank digital currencies. This is the go-to book.
Thank you. Thank you.
Nick, great seeing you again.
Likewise.
Take care.